Hi, Fabrizio.
Can you hear me now?
I can. Yes. Yeah.
Wonderful.
Can hear you loud and clear. Loud and clear.
10-4. Can you see my screen, gentlemen?
Yes, we can.
Very good. So now,
welcome back to F.A.C.E.
Thank you very much. Thank you to you, hello to everybody. And again, it's thank you for your hospitality. And again, it's an honor to be here with you. You know, I'm an Italian, so sometimes we are very shy.
Yeah, you ladies, man. How old are you? How old are you, Fabrizio?
I just turned 61 one week ago. One week ago.
We're kind of in the, the same Geritol generation. Let me ask you this, about 20, 30 years ago, because of your name, did people give you a nickname of Fabio?
Okay, my nickname in US is Fab. Okay, because in the other part of the world, especially in Italy, is F.A.C.E, Fab. But let's say Fab. The very problem is that I spent about 30 years spelling my last name, which is Jorio Fili, and everybody say on the other side of the telephone or the desk say, well, say it again. So J is in John, O is in Oscar, etc., etc.
Yeah, so you got tired of it.
It's well, no, I'm tired. I'm used actually. It's a challenge every single time.
All right, so why don't we start with what Steve Bolge was talking about, which most likely is the biggest fundamental. I mean, we already know what's happening with yields. The biggest fundamental hanging over the euro right now may be the Italian elections. You're on the ground there. Do you have a view about different types of outcomes in this election that's only a few weeks away and what impact it may have on the markets?
Absolutely. Let me add one thing, if I can. I don't remember the name of the last gentleman that spoke, and my compliments. I agree with all of you, and it's a real pleasure to be part of your show, correct? And but I'm really impressed. I have to tell you that I'm not a flatteur, as we say in French. So, but it's please remind me the name of the gentleman, because every single word is said, I completely agree. And
I'm Steve Fabrizio. Nice meeting you. I'm Steve.
Nice meeting you, Fabrizio. Nice meeting you.
Your two countries used to go to war against each other a lot.
Well, probably we made
in the Roman era.
Yeah, I know. Where is he from? From Romania or from
Greece.
From Greece. Okay, sorry.
Trojan horses.
Sorry, I made a big gaffe, as we say in French. Greece, of course. Well, we all come from Greece. I mean, the greatest. Well, okay. You know how to say? Stevie knows that. Una facia, una razia. You know.
Una facia, una razia. Indeed. We have many similarities. We're both. People that live on the Mediterranean, and we have very many personalities. Yes, absolutely.
Exactly. So it's very beautiful. So sorry for what it was.
And you're both loudly in Winter Olympics.
Yeah, okay, very good.
Except you do have a good speed skater. I saw a good speed skater. So why don't you tell us about the election here, buddy?
Okay, let me get into election. Sorry, I didn't say hello to you, my warrior brother. Okay, elections. This time, elections in Italy are less. The market implies in terms of fixed income, it implies less risk than before. Elections now in this country are very confused, but the outlook is, let's say, sharply clear, so that the right will win. the right coalition will win. Because, as you probably remember, I don't want to make a long...
Because of immigration, anti-immigration?
Well, this is not a problem. It's a more than a disaster. It's something that doesn't... You cannot even consider what kind of disaster is that. If you just to give you one figure, we deploy for nothing 4.5 billion euros, which is roughly 6 billion US dollar, for somebody who has no right to stay in this country. The 5%, less than the 5% of the people who are hosted and pampered in this country, they have no right. So we, very simply, the very left, which has been ruled by, this country has been ruled. Remember one thing, excuse me if I make a step back. We had the last election, so the last time that the people was allowed to choose the politics, the form of government, was in 2008. Since then, there's been a number of coup of state, of coup, as we say, that avoided the people to vote. So we've been ruled by, I don't want to, it doesn't matter what kind of political party I am. Probably you understand that I'm conservative, from the conservative side, and not in a mild manner. Well, they ruled in that way, and actually they brought the country, especially Monti, they brought this country in a very, 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 very serious situation. So sad. This country has been always, since 30, 40 years, mildly center-right, and never center-left. Back to the point, what is the outlook for the election? Polls, for what they count, polls are giving the right side coalition ahead, on the brink, on the possibility to, with a new electoral law, to set up a stable government without making a large coalition, so without the need to onboard other parties which are not coherent with the center-left, center-right.
Okay, so what is their platform?
Say it again, sorry.
What is their platform? What do they stand for?
Well, the platform is flat tax, which is something that we always been proposing. A flat tax, as 42 countries in the world have. For example, Russia has a flat tax. Other countries like Bulgaria, Romania, Poland, Latvia, small countries, they do have a flat tax. Some parts of the United States, they do have, I don't want to enter into something which is more technical for me than...
Okay, that's one aspect of it. We know what a flat tax is. What else?
Yeah, other aspect is absolutely security. We are in a total unsecure environment because we have criminal. We are plenty of criminal, Italian criminal. You know, there is a large amount, but we don't need to have.
Immigrant criminals.
Yes, an extra immigrant criminals. So try to imagine that 60% of the inmates in jails are not from Italy. 60%. 60%. Wow. So security, flat tax, defense of the borders, working on to be stronger in front of the euro, because so far we have been.
So are they anti or pro euro?
Myself, anti.
No, the part is the center right.
Well, the center right, it's let's say it's a split. 60% it's anti-euro, and 40% is per euro. For a very simple reason that one of the major exponent of the Forza Italia, of the Berlusconi party, is the president of the European Commission.
Okay,
so
he holds a position on the EU.
Say again?
The EU
Sorry?
hierarchy. Okay.
So and those are the point. There is a number of promises, as everyone does in during the politics, during the campaign. But what is interesting in this moment is that the market, and you can see it from the spread, provided that we are under a QE, so it's controlled. The spread between the 10 years benchmark, Italian 10 years benchmark, and the 10 years benchmark German, the Bund 10 years, it's 134. To give you a benchmark, 3 months ago it was fetched up to 155. So market implies, and that's the interesting point, implies not a great risk. The only great risk that we could have is that the Movimento 5 Stelle, which is a single party who is gathering a hefty percentage, ranging around in between 27 and 29% by himself, and it's absolutely unfitted to rule, because they rule in certain regions, in certain cities, like Rome, for example, and it's a full disaster. They have no idea how to run a car. I try to imagine how they have an idea to run a city complicated like Rome, or to run a country, and they have zero clear ideas. So the only spike that we could have, and doubt that we could have in this in terms of markets, is if M5-6 Movimento 5 Stelle will win.
And they're what? They're left, way left.
They're nothing. Nobody knows it.
No one knows where they stand. How about any of the parties talking about addressing the vulnerable state of Italian banks that trade sometimes in decimal points?
Absolutely, yes. Situation of the NPL, the non-performing loans in Italy, it's dramatic. It's dramatic because they've been telling a story since Monti in 2011 took the power, saying that everything was fine. Like you remember, Tim Geithner, all fine at Tim Geithner.
Yeah,
everything is fine.
Bernanke and
Geithner, everything is fine.
The mortgage prices,
yes, all fine. That's no problem. After 2 years and a half, we discovered in 2014, we discovered that the NPL situation was gigantic, and was very simple. Why was gigantic? Because the Monti government worked in order to shrink the demand and bring to collapse the country. Because, and this is too long story, and if you are interested, we will talk another time. Because Germany and France were interested in that, so to squeeze Italy, Monti squeezed the internal demand, and definitely the corporation exposed toward the financial system were unable to repay their debt. So NPL came from that. Let me add one thing, but the 70% of the critical mass of the NPL come from the big corporations. So everything is very much tangled, and to untangle that situation, it's not easy. Of course, we're talking about that. Of course, we have a number of corporate companies aggregating together, or banking institution aggregating. We have a number of banks in a very good shape, like Intesa San Paolo, like Unicredit, like UBI, and some small company, especially bank corporation that gather NPL and then cartelize, securitize, and resell it for 15-20 cents a dollar. But situation is complicated. Let's say we are not on the brink as we were before, because for a number of reasons. Back to the square one. From what we see, market does not imply a very high risk at the moment. We are only 14 days ahead of the almost something more than 14 days ahead of the elections. So nothing. Market hasn't started to move swiftly. Interest rates, bonds, to move swiftly. Which is something that happened before and always happened in Europe, because European politics is much more complicated than
more to assume the risk into a political event like this. So yeah, some nice coverage of what's happening in Italy. How does this play into? I know we chatted a little bit into your very constructive, bullish view on Euro.
Okay. Yes. How much time do I have? 3:19. Okay. Let me make. Let me give a very short introduction. Very simply. I don't know if you agree with me, gentlemen, but the situation now is very unclear. There is a number of things. There is opportunities and pain somewhere. Pain and opportunities. The point is, from whom there will be pain and from whom there will be opportunities. Right. This is totally unclear, because from the point of view of the different issues, the fact is that let's start with volatility, which is something that everybody knows that. Volatility will remain high above. This is my opinion, okay, very own opinion. I express my very own opinion and share with bankers and asset managers. We will remain above the 2022, in the range of 2022. The fact is that it's not that any individual asset class look irrational in isolation. It is just that the combination of the narrative across all the assets is aren't compatible. So there is all the number of the puzzle, the pieces of the puzzle are not fitting together. So equities are rallying on the argument that inflation, talking about worldwide and especially US, the argument that inflation remains in the Goldilocks zone. We are not anymore in the Goldilocks zone. The Goldilocks zone is ended at the end of December, beginning of January. The narration is no risk of deflation, but the climbing prices isn't fast enough, in my opinion, to trigger any major Fed aggression. The ramp up in fiscal stimulus and the tax reform will encourage the inflows into US stocks, and there is a but that I don't know how to, the blank space, I don't know how to fill it. Rates are moving higher, and then you can see it. If you see my screen, you can see it clearly. rates are moving higher on the perception that there are clear signs of accelerating inflation, and hence, from there, the bond bull market is, in my opinion, dead and buried. Increased supplies in bond is suddenly a major negative for treasuries, and the higher real yields offer no attraction, even though everyone is supposedly is desperate to chase any return available in other asset classes, namely equities.
So you're saying that dividend-producing equities are more attractive than yield-producing treasuries?
Definitely, yes. If you think that high yield bond yields are lower than investment grade, that gives you a perfect, and the average dividend yields of in general of the Italian exchanges, Italian indexes is above 3.8, you can imagine that with some corporation deploying 5.5%, not small but huge, like Eni, which is one of the biggest oil corporation in the world and the biggest in Italy. So people is looking for alternative investment, alternative assets, and this is it. For what is concerning the F.A.C.E, in my opinion, the U.S. structural deficit are apparently undermining the nation's prospect. So, and probably leading to an acceleration or reserve diversification away from the dollar assets. This is something very important. So both interest rates and growth no longer, this is key point. If you agree or not, I'd like to know it. Both interest rates and growth no longer drive currencies. You can see it every single day. And much higher US real yields are now irrelevant, and hence, so is inflation.
What's driving the dollar? It's more of a lack of confidence rather than yields making it, higher yields making it attractive. I tweeted that for over a year. People have been trying to figure out why the dollar hasn't appreciated with higher yields, and I said, if you bought long-term paper in a depreciating currency, wouldn't you want to get paid more?
This is an answer that I'm unable to this is, excuse me, the question that I'm unable to answer. Okay. This is the major concern for me. I'm not concerned at all in anything in my life, anyway, especially in my job, in the job. But this is something that does not allow me to build up, to open large positions in portfolio, to add position and open a large number of positions in portfolio management, and in having a better outlook of how, which one would be the direction, the constructive direction of the currencies. If you see this chart that is illuminated on my screen, which is the one that I showed you in November, if you probably remember, shaded in orange, it's the yield, the benchmark 10 years USD 10-year yield benchmark, and in blue, in magenta, whatever, is the ICSI. If you remember, my assumption at the end of November was, okay, gentlemen, rates are poised to go up, so dollar will have to go up. And instead, the spread, as you can see from here to here, what we were talking last time was this time here. So I suppose that was converging in a mean reverting, and the model was giving the same thing. And instead, it kept going down, and it kept going up. If you remember, shifting to a chart, I indicated, I'm not a predictor. I never seen a predictor in my life reach. So I trade, as you know, because we are from the same school. I trade what I see, not what I imagine. So day by day, one step after the other, of course, with the general outlook, which makes sense. But first, I was bearish until mid-October, bearish on dollar and bullish, excuse me, on euro, and bullish on dollar. But then, after a certain moment, I completely reversed myself, even in positions in loss, even covered, but in loss. And then I reversed and I said, euro is unstoppable. If you remember, but I don't think so, because you have a zillion of people hosted by you, so I'm the last one to be remembered. I pointed out 120. 120 when we were about 112, something like that, was September, October, November. We were about 116.
Nice call.
116. I called 120, 122, and I was conservative, because I'm always conservative in that. I prefer to gain less and then re-enter in correction and then go up. So that level was that I canceled to make the chart not that cluttered. Then spoke up to 25, and I said 25 is not enough. There will be 26. After the VIX, let's call it manipulation or manipulation. That's another interesting story, because it's something impossible to happen. And I don't know if we have time to discuss about that and just show it. When we had from the beginning of December, end of December, beginning of January, VIX going up and SPX going up. It is impossible, per se. It is impossible unless someone rigged the market. So everyone has been able to see that disrupted inverse correlation, which became a positive correlation until the whole game ended up. And everything came down in a certain manner with a call. I called that drop in order to be able to buy. I worked 70% on derivatives and currencies, and the rest in equities and fixed income. But the fact is that from that moment, and in the moment in which the euro fetched up to 25, everyone, first one was UBS, called 130, 136. And if you see the headline here, in PPP terms, given by the OECD calculation and the ECB study, maybe ECB study, the euro at 125 is 8% undervalued. So 8% of 125 it's around 137. Let me add this. After US, Credit Suisse came with a range of 30, 32 by the end of the year. Finally, those are financial institutions. When you come to the CEO of Airbus, which is probably everybody knows Airbus, which is the main competitor of Boeing in airline in the airline industries. 4 days ago said we are perfectly geared up for an euro at 22.32. When you have that kind of a statement, you consider that empirically, heuristically, the euro is, in my very own opinion, unstoppable. I've been listening the very interesting contribution of Steve about GDP, and I perfectly agree with that. Perfectly, 150%. If you can, you even say that because it was something we used to say in the 70s and the 80s. And euro is, in my opinion, graphically, but then even with other tools, directed toward at least 128. As you can see, the target that I have, and I get more practical.
So would you buy it right? Would you buy it right here, right now, after this pullback from 25.80? We've gotten to about the 23 handle or so. Is that pullback a buy?
This pullback is a buy. Yeah. Where
would your view change? Under 120, under 119, 118, the picture changes.
Yeah, I never never say never. I stated that was very unlikely for the euro to go below 123. Instead, it did it. It did it for a number of reasons, due to interest rate, due to the deflecting, to the steepening of the curve, of the curve of the 2/10 in US. And so the increase of the steepening of the curve and the increase of the yields, but in this moment the consolidation, technically speaking, consolidation is very clear. We talk here is weekly. If you go to the on I don't have to tell it to you, gentlemen. If you go on daily, it's very simple. It's very clear. I do not expect euro below 122 again, below 122. Probably a little spike under a little spike under 23, 122, 125, 122 and something. Not very much below. This one is the line of the sand.
Okay, so 122 back under 122 would change your bullish posture.
Below 120, let's put it. Let's make the figure clear. Below 121.54, the situation can change because very simply, I'm not a magician. It's 50% from the higher high and the lower low, and this target, which was I never supposed would have been touched, has been touched. We are in 26. Well, we're actually not arrived at 26. We arrived at 125.60, 125.55, and that is something. Next
what
target.
Is that blue line up there? Is that a moving average or a trend line?
Which one is it?
On top. The blue line that it just hit. Yeah.
This one. This is it's a trend line coming from the very top.
Okay. So
it's a trend line.
Watching that. Okay.
Yes, it's this one. It's coming from the very top, and this one it's always been very much effective and efficient. But by and large, I always draw several trend lines because they come from, as I told you last time, from Tom DeMark trend lines. They are very effective to me. That they give me certain objective in high and in low, a number of objectives. And those are my target. So my call, if I'm allowed to say that, is step by step, as I always do, one step at a time, one day after the other. It's 128.32. Then we'll have to take away 129. That would be a very, very, very tough barrier. And then by the end of the year, probably we will be directed to 132 and 4. If you see AB equals CDs, this movement equal to AB equal to BC, which is this one, brings me exactly to 135.53.
Yeah, okay, so it's equality.
Yes, it's equality. It's
from the 103 wave to 120.
It's a double drive.
Pips.
It's a double drive. You know that. But what is interesting is again this. I work with different tools, and if you see, this is on a very short time frame, in 60 minutes. In red, it's a spot euro. Okay. In black dotted, it's the 25 delta risk reversal. What is a 25 delta risk reversal? There is a ATM at the money ATM risk reversal, which is neutral, and there is a 25 delta risk reversal and a 10 delta risk reversal. 25 delta risk reversal means buy a 0.25 delta call and sell a minus 0.25 delta put. So it's not more neutral. It's more, let's call it volatile. To make a long story very simple and very short, why do I use that besides the activity in FX options, which is much more complicated than in equity or in commodities, because it does give me again. Let me add one thing. This is, as you can see here, on a very short time frame. So spot, of course, and 1 week 25 delta risk reversal. What is in this case the usefulness of this because since market is driven by interest rates and by the auction, the price action is driven by the interest rates and price auction. So price action and auction. On the other side, what is implied inside the prices of the options and the way that the optionists, the market makers, and the large option traders price the underlying, it's very interesting. It's very important. As a matter of fact, you see there I have let's make it simple. It's a kind of overboard, oversold. It's a kind of, let's say another way, it's a Bollinger Band, you know, a little bit more concrete. Bollinger works on standard deviation, and here we're working on people bidding and asking, bidding and asking and selling options or selling strategy, like in this case. Is always a little bit ahead, and so gives me a strength of the movement. If I add this, which is if it comes up, let me see, because I don't know why it doesn't come up. If I add the realized volatility, then I don't know why it doesn't appear, because one sec, there is always some problem, always. Again, well, we can see the historical volatility is on 1 week, but we can see it on 3 months, which is more it's more interesting. You can see that that once the implied volatility or the 25 delta risk reversal or the ATM implied volatility of an option cross up the historical volatility, that is a sell. When crosses down, that is a buy. Unfortunately, as always happens, happens. It doesn't show me but that doesn't matter. It doesn't matter. It would be even more cluttered. Let's see if it's here. No, is that here? No. Okay, no problem.
Okay, buddy. So the major point is when volatility blows up.
Yeah, as a matter of fact,
the euro's overvalued and comes down, and when volatility is crosses to the downside with very low volatility readings, the bias is to the upside in the euro.
Exactly.
Okay. Well, what a great interview, Fabrizio.
Well, thank you very much for that. I thank you for your hospitality. I thank you always
really,
for your hospitality.
Huh?
I always thank you for your hospitality, and it's a pleasure to discuss with the people like you. It's a real treat. I can say that.
Well,
let me add a couple of things
for us too.
Gold falling apart, and CL going down, and European market. This is the point. European market flat, and yes, inching down. So, make it to come to a conclusion. Situation is absolutely unclear. But there is opportunity to make money. There is always opportunity to make money. Always.
Right. There's always another trade, another bus around the corner, another train to catch, and sometimes we see the market better from the sidelines so that we could see the forest from the tree. So thank you so much, my trading warrior brother.
Thank you to you. Thank you to you guys.
Appreciate you being with us, and people that want to follow your work, you could follow Fabrizio on Twitter at Warburg100. He used to be with Warburg Pinkert.
Yes, Pinkert.
You know that the firm was not Warburg Pincus, it was Warburg Pinkert.
Yes.
My relatives, Warburg Pinkert, a long time ago, which is a very renowned old money institution. Are they still around?
Yeah, it was in England because
okay.
Because Warburg was German from Hamburg, and then they moved to England, and they joined with the Pinkert, and then they changed it.
No, I'm kidding. It's really Pincus, not Pinkert. But I'm Pinkert. So that was just a fantasy that I was born with a silver spoon in my mouth, but I wasn't.
And I was following you because
I had to kick open every door to open for me. What?
And I was following you because for the respect that I have to you. Because I so much. Another one Pinkert.
All right. Good hunting, and let's get back together in a few months and see how things stack up. See if we get to your targets. Okay, buddy?
Okay. Thank you very much again. And it's been a real pleasure. And I hope I give my contribution, a valuable contribution.
It was great, especially, your work on the market and giving us some idea of what's happening to the politics on the ground in Italy. Arrivederci, bro.
Arrivederci, my friend.
All right.
Warrior brothers and goodbye to everybody. Bye-bye to everybody, and my compliments again. You are very skilled and very good. I appreciate that.
Thank you, Fabrizio, and
thank you to you. Thank you for your contribution.
Okay, we'll have Turnaround Tuesday tomorrow, Wednesday. So Turnaround Tuesday is Wednesday. See everyone for our session tomorrow. Thank you, my trading warrior brothers and sisters, for your attention. Maybe I'll see you in the private chat room. Adios.
Adios. Ciao.
Adios.
Adios.